expressed on the program are solely that of Heiar Insurance, not necessarily WBEV or Good Karma Brands. Welcome in, everybody, to Taking Care of Business, of course, featuring Heiar Insurance. Got Matt Heiar with me today. Good morning, Matt.
Hey, how we doing today?
Doing all right. How about yourself?
The sun's out, so I can't complain, and it's getting closer and closer to the end of our enrollment period.
Yeah, I feel like every time I talk to you, it's almost like a mental health check. Like, how's Matt holding up? Because it is a really, really busy time of year for you guys. Not only do you get a lot of people who are looking at end of the years when I want to retire, so they're starting to plan for that and look into that. But then you got those two big open enrollment periods going on right now.
Yeah, it's so open enrollment is for Medicare Advantage plans. This is for prescription drug plans, and it ends December 7th,
right?
Which is a weekend.
Of course it is.
Yes. So Sunday, December 7th is actually the scariest day is Monday, December 8th, because it's like, is everything done? Mm-hmm. So it's a relief, but at the same time, if you haven't got your drugs into us for us to run them, or if you haven't reviewed your Medicare Advantage moving forward for next year, it's definitely time to give us a call because we're running out of time. 920-887-0580. I'm just so discombobulated because Thanksgiving's really late this year.
It is really late this year. It feels really late, and it feels like we're not going to have much of a gap between it and Christmas now.
Yep, I know, and that's why I normally have like a little bit, like I have 2 weeks usually after Thanksgiving, and now it's like after Thanksgiving we have 5 days.
Yeah, you got to really hit the ground running if you haven't already done so at that point.
Yes, so it's a little scary, but with the weekend being beautiful, I think we're gonna do our Christmas tree shopping this weekend, because next weekend is normally when we do it after Thanksgiving. Okay. But it looks really cold next week.
It does look really cold next week. Now, you must be a live Christmas tree person then? You go for the real?
Never was growing up, but my wife's family did it a lot, and now it's just kind of a thing.
I feel like it's like a recessive gene. If one side's family did real Christmas trees, it just gets passed on.
Yeah, and I lost that battle because a fake tree just sitting in the basement would be so much easier. And but yeah, it's fun. The kids like it, so we are gonna go to a local farm and pick out a tree and bring it home, just like the Griswolds.
Do you get on the handsaw and cut it down yourself, or do you let somebody do the cutting for you?
I did that one year. They give you a little saw, and then I almost passed out.
Okay.
So I bring a Sawzall, a battery-powered Sawzall. I cheat, but I remember like last year I gave it to like 3 people. I saw the dad underneath the tree and the mom. He's like, hold it. And I was like, would you like this? This might be a little easier. Now,
does that qualify as Midwest nice or just nice in general?
I don't know. I saw a fellow gentleman struggling, and I was like, hey, this'll solve your problem quick.
There you go. Sometimes that's all it takes.
Yeah. Are you real or fake?
I think I'm real. I'm not AI. Oh, you mean tree? Oh, yeah.
I believe you're real.
Yeah. No, my household growing up, and it still continues to be a fake tree. But it's a real nice fake tree.
It's okay.
Yeah, like we didn't lean into those ones that are like, you can tell it's fake because it's made out of tinsel or anything like that. It looks like a real tree. It holds up very, very well. My wife and kids probably spend hours fluffing each of the branches every year to make sure it looks just right.
Sure.
So unless you get real close and touch it, yeah, you're pretty sure it's real.
Yeah, so it's crazy. And then we got the Packers that play on Thanksgiving, so they have a quick turnaround from Sunday to Thursday. So Thanksgiving is by far my favorite holiday.
It's a great holiday. I mean, between football and the food, and families in there as well, it's hard not to like the day.
Yes, so that's going to be exciting, and get some good food in, and then I know I always say I just got to make it to Thanksgiving.
Right.
Because then I know, like, okay, the enrollment period's almost over with. So it's been pretty crazy, with just everything going on. And the Affordable Care Act stuff, that's another enrollment period that we're dealing with, November 1st to December 15th. So that will continue on, but it's just not as chaotic.
Right.
So we've had some good appointments and bad appointments. And people are nervous when they get in because you hear all this stuff in the news, like the tax credits are going away, the government didn't extend them. And so basically we're just going back to like pre-COVID times where if you make X amount of dollars, which the cliff right now this year or for next year is going to be about $84,000. Okay. So if you have a household income more than $84,000, you will not get a tax credit. So if you make 83,000, you get a tax credit.
Right.
So that's the scary part when
It's
people.
a tough window, right? You get a little overtime, and suddenly you're paying in at the end of the year.
Yes, so it's a little scary because the plans, they didn't get any better. You know, they have like $10,000 max out of pocket per person, but it is major medical, so we still can do the preventative exams, the wellness exams, routine labs, colonoscopies, mammograms, all that good stuff. So that's something we definitely want to utilize.
Right.
But it's been a little scary. So we've had some good appointments because, which I'm confused by. You know, someone's like, "Oh yeah, I'm scared. I don't know," and we put in their income of 70,000. They get more of a tax credit than they got last year, and it's like, what?
Crazy.
That's not how
The subsidies went away. How are we getting more?
So it hasn't been all bad, but yes, now we just have to do a little bit of a strategy, whether we're pulling from Roth accounts, which is tax-free income, or we're, you know, subsidizing our income through checking accounts or savings accounts because that's not taxable. So we just have a little bit more work to do, but yes, it's nice when people are retired and they have fixed incomes. You know, so we can kind of play with it like, oh, well, let's just lessen your IRA withdrawals and we'll pull from here instead of here. And then we can stay under that limit.
Right, because you're like, if we pull from this, it doesn't count as income. But if we pull from this, it does. So that can fluctuate.
Yes. So it's just a little bit more work, you know, and thinking on our end, but it's still, the plans are the same. Tax credits are there. So people are still getting insurance. But this is one thing if you're about to retire, we'd like to meet you a little bit sooner because we have to strategize like, hey, it'd be nice if you retire at the end of the year because then when we go on the marketplace insurance, we don't have all those working wages. Because I'm asking people right now that come in for the marketplace, what are you making next year? And they bring in their tax return, and that's great, but that's from last year.
Right.
You know, is it, and maybe it is the same, but so it's just a lot more questions, and, you know, we have to prepare a little bit differently. But so the sooner the better. So that's why, like, if you're planning on retiring at the end of the year, I'd like to see you, you know, like early next year, just to kind of like, hey, this is what it's going to look like, and just educate you on how the marketplace works. And I just want you to stay away from that cliff.
Right.
So the good part about the cliff, like if you're over, you know, if you're well over your $100,000 household income, yeah, we have to pay the full price of the plan, you know, and the plans aren't that great.
Right.
But we're retired and we're not filing bankruptcy if something major happens.
Right.
So you could get a full-time job, we can pull as much money as you want, and we're not restricted that our insurance is going to get higher.
Right.
So that's why a little bit more planning, had good appointments, bad appointments, but we're still getting people health insurance for 2026, and that's the main thing.
That is definitely the main thing. I want to remind everybody again, of course, Heiar Insurance. You guys are located over there at the Heritage Mall. Throw the hours out there again for you guys, 9 to noon and 1 to 5 Monday through Friday. 920-887-0580. We got Jill and Sarah over there holding out still.
Yep, they're still there. They haven't quit yet.
Okay, so they're still standing by to take your calls and give you some help. If you have a question you want to maybe get answered now, you can feel free to give the call into the show. You can call us at 920-885-4446, or you can call or text us at 920-887-9595. And we do have Ashley up in the studio ready to take your call or text, so feel free to do so. Wanted to ask you about something that I saw recently. And it's this new trend of videos that I'm seeing on social media. I've seen a few on TikTok, and I saw a whole video on YouTube of somebody doing it. And it's where they'll call a provider, hospital, whatever, and they'll say, well, you know, how much does it cost to get this done? You know, no, just cash out of pocket if I'm paying myself. How much does it cost? And then they'll call again, and they'll be like, hey, I've got such and such insurance. When am I getting billed, or what's billing to my insurance if I do this procedure? And there's this weird disparity between the two, because like, oh, you're paying for it yourself. Okay, it's going to be, you know, $1,000 for this procedure. Oh, we're billing your insurance. We're going to bill your insurance for $8,000.
Yes.
And watching those videos, I've had people then reaching out to me going, so what's the point in getting insurance? Like, because if you're going to pay 80-20, you're still on the hook for 20% of that. That's $2,000 in your pocket. Why wouldn't you just pay out of pocket yourself for $1,000?
So I've seen those videos,
Right.
and it's scary, and that's terrible, right?
Right.
We should have a standardized, you know, how much it costs but that's why these insurance premiums are going up astronomically. you know, and because these claim amounts are just ridiculous. And so, but I've seen those videos, and and it's dangerous because people are like, well, I don't need insurance, I'll just pay out of pocket.
Right.
And yes, that's an option, but that's for that procedure or that office visit. Right. You know, like what about if something major happens, car accident, med flight, $100,000 surgery, you know, well, okay, yeah, it's not $100,000. Since you don't have insurance, it's only 50.
Right.
It's like, okay, that's half the price, but now we have to take a mortgage out just to pay for our surgery.
Right. Whereas with the insurance, you eventually hit your maximum, right?
Correct.
And
yes.
then you're good.
And I joke about like, oh, it's ridiculous. It's $10,000. I'd rather have a loan for $10,000 than 50. And who knows? We're not even talking about the med flight. How much would that be? And so those videos are dangerous because it's like, yes, those certain situations, and I believe it's happening. You know, it's terrible that it is. But that's where I said, like, fixing our health insurance issues is not just like it's this problem. It's this problem.
Right.
It's so many variables and moving parts that it needs to be fixed, yes, but where do you start?
Right. And I feel like I'm seeing more and more people are kind of vilifying the insurance agencies, which is easy to do because, as we've talked about before, it's their names you see on, you know, stadiums and football fields everywhere. But like you were saying, there's a lot more that goes into it. And unfortunately, with people just vilifying one individual or one group insurance, they're trying to find alternatives that might not be the best option for them.
Yeah, I mean, just earlier this year, we had, you know, where that guy got murdered basically on the streets,
right.
You know, because he was involved with the insurance company. He was the CEO. And I mean, I don't know the whole story. We don't know the whole story. But yes, they're saying like, oh, this company had the record amount of denials, you know, for procedures. And it's like, well, they are the biggest in the country.
Right.
So they're probably going to have the most.
It's kind of like when we look back at the old Brett Favre, and he had all the records, good and bad.
Yes. He threw the most touchdowns with the most interceptions.
Right.
You know, so one comes with the other. But like, yes, like, so, I mean, and they were like kind of praising him, saying like, yes, you know, he's standing up for us. And it's true. Like, yes, there is a slight, you know, he is standing up for it, but not the way we do it.
Right.
And it's the trickle effect of like, okay, look how much these hospitals have to pay for, you know, their computer programs and their, you know, that's why I just don't know exactly where. Is it the people, the billing departments? Is it the insurance companies? Is it, you know, and where do we start? Where do we stop? The pharmaceuticals?
Right.
That's not helping anything either. And so it's hard to just, you know, say like this would fix it. We should just do this.
Right.
You know, and then the new administration, they're talking about like, well, instead of these tax credits, let's just give the money to the people. Okay, that's an option, but at the same time, are the plans still going to be astronomical?
Right.
You know, so like, okay, yeah, we got money and we're not giving it to the insurance companies. Well, what are the insurance companies going to do? They're going to raise the rates, you know, or start asking health questions. So I don't know if that's a fix, you know, but to everyone, it's like, oh, money. Yeah, I'll take it.
Well, that makes a lot of sense, except I think, you know, if you're going to hand me a bunch of money, who's to say I'm guaranteed to use it for healthcare?
Right. And so I don't know if that's the fix either. But yeah, it's the main thing that has to stick with the Affordable Care Act, even if they try to abolish it and get rid of it, the pre-existing conditions. There should not be any health questions. If you want to seek health insurance, you have to do it during the enrollment period. I get that. Okay. Or during your life event if you lose coverage. But they should not be allowed to ask people health questions because that's not fair. It's like if you know, have cancer and you're 50 years old, 40 years old, that's not your fault. Right. So I think that's the one thing that will stick. So there's like bits and pieces of the Affordable Care Act that are great. But what happened is these plans just started getting further and further out of hand. And then the government is subsidizing it more and more. Well, that's our tax dollars.
Right. So we're still paying for it one way or the other.
Absolutely. And that's why we're seeing this trend of these companies on stadiums. And so they're not hurting by any means, but I'm not saying let's strip them, you know, gut them and just, you know, say, make sure they don't make anything. But it's a really frustrating thing. And I feel bad for a lot of people, especially people that have to go on the marketplace and they have a lot of doctoring they have to do. just because of a certain situation. Well, the max out of pockets are very, very expensive.
Right.
So, like, there's 3 tiers, right? The Olympic style,
Right.
bronze, silver, and gold. The majority of people are, if you have somewhat of an income, but you still get a tax credit, are taking a bronze plan. It's just catastrophic. Like, they're just making sure they have something.
Right.
And
Because
that's
costs for gold are astronomical.
right.
Even silver. Could be
And
crazy.
mathematically, it just doesn't make sense. It's like, oh, I'm paying $500 a month for this gold plan because it has a little bit less of a deductible, but that's $6,000 a year.
Right.
And the deductible is only $8,000 now. It's like you're still paying more. So if you have a catastrophic event, the bronze plan actually was less out of pocket,
Right.
which doesn't make sense at all.
And I know we're all hoping like those catastrophic events never happen, but there's a not zero chance it's going to happen.
Well, and just the competing insurance companies, in our area and just all around, I was typing in like Florida zip codes, and they all know what each other are charging. The max out of pockets are almost identical.
Of course.
So it's like, it seems like they're colluding almost, and the consumer is just the ones that are, taking it basically, and that's what. It's a frustrating thing, and I know the government said they're going to meet and talk about it. I don't know what is going to fix it, and this is what I do for a living. There's going to have to be a lot of things,
Right.
and it's going to be a lot of work, and it's too much to think about during an enrollment period right now.
I can imagine. Yeah. Yeah. And I mean, and we know there was discussions. It was kind of the crux of the discussions during the last government shutdown. I'm sure it'll be part of the crux of the discussions with the next one.
Yeah, and we have to have the discussions,
Right, we do.
So I mean, I think both sides of the aisle are agreeing that something's got to be done. So I think this could unite people, hopefully, because we're so divided on everything nowadays. And it's like, I think we all want decent health care, access to doctors. And I think that is huge. And I don't know someone, regardless of what, political side you're on, that's something that, yes, as Americans, we would like that.
Right.
So we'll see though, but it's kind of like anything with the government, right? Believe it
Right.
when I see it.
Yeah, that's pretty much how it goes. Shifting gears a little bit, still talking about insurance. I had somebody, and I tried to explain to him, and I'm probably sure I did it wrong, asking about preventing gaps in coverage. They are looking at, I think they're like 3 years out from retirement right now. Mm-hmm. And the question was, well, about 3 years out from retirement, but I'm really 3 years out from being able to sign up for Medicare. I may want to work a little longer. I may decide I hate my job and want to get out a little bit sooner. Mm-hmm. But I don't want to get out because I got really good insurance. Great. I love that you got really good insurance. And I mentioned Cobra, and they immediately kind of breathed out their nose at me like I was crazy. Because we've all seen those numbers before. We talked about it.
Oh, yeah.
And I was trying to explain how it works, and I was like, I'm probably not doing this justice. So I told me I had to turn in and listen to the show. Explain how that can help with preventing a gap in coverage.
Yeah, so basically now, especially with the marketplace like this, how it is right now, the golden age is 63 and a half, right? Because COBRA is a federal law, and it's basically the continuation of your coverage that you have, your current plan. So you're eligible for up to 18 months. So that's huge, because if we make it to 63 and a half and we want to retire, we used to laugh at the numbers, COBRA numbers, and people are like, I'm just going to work till 65. And I get that, but at the same time, we're not guaranteed tomorrow, right? So it's quality of life. So by paying COBRA prices, if you're not going to get a tax credit, people are taking COBRA. And then I don't have to ask you how much you make.
Right.
You're comfortable with the plan. You can go to your doctors. And they typically, with group insurance, is lower deductibles.
Right.
So that's why if you are coming in to retire and stuff, ask the COBRA numbers. I know hopefully we don't have to go with those, but that's why using those certain strategies of like, hey, let's retire at the end of the year, because that we have no working wages and we can get affordable insurance.
Right.
It's not better, probably not better, but even group plans are starting to get higher max out of pockets and deductibles because the employer is paying those COBRA numbers.
Right.
So people are shocked when they see COBRA numbers. It's like, that's what your employer's paying. Well, I only pay $100 every check. Yeah, so you pay 200, they pay 1,400. So it's a there isn't a right or wrong answer, but if I sign you up for a marketplace insurance and you don't like it after a couple months, Cobra's gone.
Right.
We don't have that option anymore. Now, one thing people don't realize, you can Cobra your dental. Yes. And that's so a lot of people are like, wait, I don't want a Cobra. It's like, no, just your dental. See how much that is.
Right.
Because employers don't pay an exorbitant amount towards your dental, and dental isn't crazy. So it's like, yeah, I pay $30 a month. Well, it's like, well, the plan's only $45 a month.
At that point, it's almost worth it, right?
Would you like to keep it for another 18 months? I mean, we're kicking the can down the road, but at the same time, it's like, okay, let's do that. And, and that would make sense at that time. So that's why we like you requesting the Cobra paperwork, just to see if that, if we want to do dental, if we are doing health insurance, and how much it's going to be. And then we have something to compare it to with the marketplace.
Right. One of his questions, and I said I had no idea how to answer this, was what if your former employer, as you're 6 months in or whatever to your Cobra, they make changes on their end to the plan? Does that affect what you've got, or are you locked in to that 18 months based on when left?
So it's a continuation of your coverage. So yes, if your employer decides to switch health insurance companies, you're switching too, right? But they sign up for a year. So typically we do a calendar year for a lot of companies, but some do fiscal year. So yes, if they're like, hey, starting in January we're going to this company, you would be switching also. So, but who administers Cobra is usually like a third party. Right. It's not like the insurance company just bills you, or your company, you pay your company. You'll get the Cobra packet, and it's usually from like employee benefits, corporation or something like that. Like, right. And then that's who you write the check to. That's who monitors how long you've been on it, and they give you all the dates and start times and good stuff like that.
And then because normally when your employer goes through a change, there's usually you have to make selections for what you want and enroll, pick here, there, whatever. Do you get those same then choices?
No, you're going to be on the same plan.
Okay, so it's going to be equivalent to just whatever the new is.
Yep, and if the premiums go up, you pay more. So, but it's a peace of mind. Now, a big thing that people always do, they'll call me in like June and be like, hey, I retired at the end of the year. I took Cobra. I don't like it. It's too expensive. Can I go on the marketplace? Technically, no. That is not a life event because you're voluntarily leaving Cobra.
Right.
So we have to wait till the enrollment period. So that's why. So we're waiting for November 1st to December 15th for a January 1st start date. So that's another big thing. Now, if your Cobra runs out in June, right. Yes, that is a life event. You are losing coverage then.
That's good to know. So when you're planning it out, remember, if you take it, you're taking it.
Yes, and the big thing about marketplace, 60 days. So it's a 60-day window. So like you're talking about gaps in coverage. It's like if you lost coverage, January 1st, but you didn't get in, all of a sudden you come in February, we could still sign you up.
Right.
Right. But if you're in March, your plan wouldn't start till April, and that's too late. That's too long. We have to wait a full year.
So timing really is everything.
Yes, but I'm hoping people are realizing they're losing their coverage, and this is important. You can also call the marketplace. Marketplace is an agent will sign you up absolutely.
Right.
So you have the options. You don't have to go to a local agent. I recommend it just because you want to know what you're signing up. Your local agent probably knows providers in the area or what doctors you go to and what they accept. Just a little bit more of an understanding than someone, and I don't know where they're located, but they might not be as, they might not know as much about our local community and what doctors are in and what doctors are out.
And you guys have been doing this long enough, you kind of understand the lingo. So if a word or phrase gets thrown out there that the average consumer is going to be like, I have no idea what that means.
Oh, yeah, absolutely. And just little things like, that doctor's retiring, so who is your new doctor?
Right.
And that's all that matters. I mean, like I can't brag about the plans, but I type in your doctor, and if there's a nice little green check that says they accept this plan, that's all that matters.
Right.
Right. So we're noticing some doctors are accepting other insurances now, so it's a little bit easier. But yeah, we're basically trying to take the cheapest plan. right? It's just so we're not filing bankruptcy. That's the main thing.
Right. Speaking of, filing or not filing bankruptcy, I want to switch gears and talk a little bit about life insurance. There are a lot of people out there who I know who are still debating, should you get it, should you not, when, why not? And it's becoming a bigger and bigger discussion. I know there'll be a lot of people sitting around tables, talk with family, and, oh, so-and-so passed last year. Yep, they didn't have a life insurance policy. Boy, were they on the hook. Boy, was it tough for them to figure out how to, continue to pay for the house, or they had to file bankruptcy because they couldn't afford whatever. Those are tough discussions that are going to be had. Any advice for people when it comes to looking into life insurance, what they should consider?
So those are typical people that come in. So a story close to them happened, and they're like, I'm not having that happen to my kids.
Right.
And they get life insurance. But if you have debt, and yes, you probably should, right? Do you need life insurance is something you can get overinsured very quickly, right?
Right.
You don't need $1 million, even though that's what they say on TV, $1 million for $10 a month. Then there's fine print, always.
Right.
No health questions.
But if something happens to me, $1 million for my family is great.
And it's not a retirement vehicle either. Because
Right.
people I'm like, why do you need it? They're like, well, it'd be nice to give to my kids. For what? They have jobs.
Right.
And it's like, but now if you just bought a lake home and you have $250,000 in debt and you want the kids to have that, yes, then maybe that would make sense.
Right.
But we're leaving it to underwriters, so we just got to make sure that we're getting the right product for you, because there's so many products out there and there's a lot of contractual language. So what I tell people is like, hey, before we pick a plan, before we pick a number, let's do the health underwriting. So we basically fill out the application, and we don't have to put an exact number. Then you just have the paramed. They'll call you. Right. They'll meet you at your job, at your home, and they basically just do a blood draw and check your blood pressure, a couple things like that. And then we get our response from the insurance company. Yes, we rate them at preferred. Okay, now we can start going into it. What do you think about this?
Right.
So, because that's what it is. A price for a smoking and ultra preferred, way different. Two completely different opposite ends of the spectrum. So we just want to make sure that, we're giving you accurate numbers, because it's happened before where, when I first started, I was like, yeah, I always did standard. Right. Everyone's standard. But I was giving people numbers, and then they do the underwriting, and they came back at just a terrible rating because of, X, Y, and Z. And they're like, well, I can't afford that, and it kind of fell through. But then what we do is we send it to a broker of insurance companies and let them fight over it. Say, hey, who will give me a quote? Who will compete with this? Who can give us a better rating?
Right.
So it's not the end of the world if, this company says, nope, sorry. It's like, well, let's see if other companies will look at it.
Now, is there how long is this underwriting good for? Like, if I go in and see now?
6 months.
6 months.
Yep.
Okay. So
it's pretty
you got some
standard,
time.
but
Now, does that mean I can just go out and do some healthy living for a few months, 6 months, a few months in advance, and then do the underwriting so I look good?
Yeah. I mean, they look for things of, you're doing your yearly physical, right? Your labs haven't changed. They're not adding medications, from this year to this year, or upping the doses. Right. So there is things that they do look for and stuff, and they have questions. So they do a phone interview typically. But yeah, you're signing a HIPAA form where they get to see your medical records. So we could lie on every question.
Right.
But they're going to see it.
Makes sense. And now you talk about getting overinsured. This is where I hear about people that have, 10, 15 policies, $10,000 here, $15,000 there, $100,000 sitting out there somewhere. How does that happen?
Well, I mean, back in the day, we used to purchase things from people at your doorstep.
Right.
And the problem is there was just always so many insurance companies, right? It's just new ones popping up, and a lot of them have either not dissolved, but they merged with other companies now.
Right.
So the main thing is, if you're seeking life insurance, cheapest isn't always the best.
Right.
Because when we have to file a claim, and hopefully we never have to, but if we have to, we're trying to call this company, and then it's a different company that answers, and we're like, and they can't find your policy number, and it just gets really frustrating. So I recommend an A-rated company, a company that's been around for a long time, because we're going to potentially have to use this, right? And we want to make sure they're there, and their customer service is great, and their payouts are quick and prompt. So those are the things we look for. We as insurance agents look for more so than, hey, this is the new hot gun out here. We're going to sign everyone up with this, and we're going to have to deal with this also. So we like great customer service. We like, obviously, local companies are great, but we like American companies, so we're still calling somewhere here. But yeah, it's just little things like that. That's how we judge them. But yeah, there is like different ratings that we kind of go by. But sometimes we might have to go with the newer company if they're the only ones that are kind of sticking their arm out and saying, yeah, we'll still, insure them. And hey, if it's something, right, it's a little bit more pain in the butt for the claims, but let us deal with that.
Now, I think the fear I would have maybe if I had life insurance or something with let's say I went with a smaller company or a newer-ish company, and they then got merged and picked up by somebody else. Is that something going to change my premiums? Is that going to change whether or not I get a payout if something happens?
They do honor it and stuff like that because these are contracts, right? And they're gladly taking your monthly premiums,
right?
So they will honor. It's a little bit more work, or you'll start getting statements from a different company and then really confused. So that's why transparency. Parents, tell your kids what you have, right? Because there's people that pass away, and then they're like, their kids call us like 3 months later, like, I keep getting this statement, and I don't know who's this from, and because that's the worst thing if a policy lapses, right? Because no one's paying now. We don't want to lose that. Life insurance, unclaimed life insurance is huge. It goes on because the insurance company's not going to call you and say, hey,
we owe you money.
Yes. So we want to make sure, and there's different protocols, about how we fill out the claims. Obviously, they need original death certificates. That's another thing. Get more than one death certificate.
Right.
They ask you for a reason. That's because there's so many different things that they need original death certificates to actually verify that person as deceased, and you are the beneficiary, and you need the claim amount. They will send the claim forms then to you.
Term versus whole life. We've talked about kind of the definition between the two before, but remind people what the differences are, and then are there differences in requirements as far as like signing up?
So they both have health underwriting, right? I know you hear on TV that
no questions, no
questions, nothing and stuff.
Just call, you got it.
Yep, and that's not true at all. But so term is for the term. I mean, literally how it sounds. So it would be like, yes, I'm going to pay my house off in 10 years, but I have $100,000 on it still. Perfect. All right, let's get 10-year term, right? If you pay it off early, cancel it.
Right.
Permanent insurance or whole life is literally they are guaranteed to pay that death benefit. So typically a higher premium.
Right.
They build cash value, so you can take a loan from that money, and it's just a non-market correlated thing. It's not an investment by any means, but it is another way of just receiving dividends and building a little pool of money to set aside for a rainy day, or yes, if you take a loan from it, and you took $10,000 out of your cash value, and it was a $50,000 policy. Yeah, the death benefit goes to $40,000.
Right.
But it's money that we could use now. So just another bucket, basically, is what we call it for retirement. But there's not a right answer for either one.
Right.
It's all situational.
Is there can you do like a 2-year term, or are these generally like 5, 10?
Yep, typically 5. It would be the lowest.
Okay.
Because 2 years, they're going to start asking questions. Why?
What's going on? What do you plan on doing? Oh, I want to take up skydiving.
And you can cancel it, obviously, after 2.
Right. Now, with whole life, can you cancel that?
Yeah, you can. You can cash it in, but you're the best part about whole life is you're locking in your age, right? So the premium is the same. Because with term, after that 10 years, They're like, yeah, you can continue it for triple the premium.
Right, because you're 10 years older now.
Right, and it's like that we're not doing that obviously, but with the whole life, if you get it at a young age in your 20s, so you get it at 25 years old and it's $50 a month. Well, guess what? When you're 95, it's still going to be $50 a month. So, and along the way, growing cash value too.
Right.
So yes, but you can cancel you can cash out is what they call it, your whole life policy.
I find it interesting that people don't just automatically recommend like, hey, you're 18, start investing in whole life insurance now.
Yeah, and it's not an investment, but it's just like one of those things where almost like Netflix, right?
Right.
Like you just pay it and stuff, and you don't realize it, but then you get statements. You're like, oh wow, look at that. That could be a rainy day fund potentially, and it's all situational. But yes, like I got both my kids. I think they were both under 8, and I got them whole life policies. So one day I will give that to them when I feel like they'll actually continue to pay it. So, because I always say, at 18. Well, when I was 18, I don't know if I was too good at paying bills either. So we'll wait a little bit. But yeah, I mean, it's just something that if they did have a health scare or something like that, or just like an autoimmune disease, anything that it's fine. But to an underwriter, they red flag everything.
Right.
Just to make sure that they have something.
Now, were you able to get them for them just because you're their parent? Or like, can I be like, my neighbor, I'm going to take out a policy on them?
Well, there'd be a lot more questions.
Right.
So you can take life insurance policies on other people, but why? And that'd be what the underwriters would be asking. But I just did it for my kids because it's something that, peace of mind. I mean, I don't know if I could pay for a funeral right now. They're not cheap, and and I never want to use that for that reason, but it is something, and it's such a cheaper rate. So yes, it's not going to build cash value as much, but I'm not doing it for the cash value. I'm doing it for peace of mind. Just like I have life insurance on myself and my wife because I don't want them to have to move out of the house if I pass away.
You touched on something there that I'm going to lead into this next question with, but you mentioned funerals. Obviously, people, dying, people having major health problems, things like that, are all stuff that can come up in conversations you have to have with people. How do you balance having those conversations and being empathetic, but also professional and realistic?
You say stories, like just that's the main thing is just like all the stories I hear where they're like, yes, mom and dad didn't have anything. They owed $20,000 on the house, and like it's like you make people aware of that, and it has to make sense. It's like if you can't afford it, the funeral, then it's like, what are we going to do about it? A lot of people are prepaying funerals and stuff, but when you do that, it's like make sure it's locked in. Right. Because I bought this 30 years ago and I'm just getting cremated, so I gave him $1,500. Well, that's not how much it costs now.
Right.
So making sure that like, yes, you absolutely can go there. I just dealt with the situation where they moved from Illinois.
Right.
And it doesn't transfer.
Oh.
So if you want to get cremated,
they gotta truck the body all the way back.
Yes. And is that something you want your kids to deal with?
Right.
So there's a lot of scenarios, and there isn't a right answer. But yes, people come in a lot of times, and they're like, hey, can I get life insurance for burial? And it's like, okay, could you pay for a funeral right now? Well, yeah, I could. It's like, then do we need that? It's
right.
It's
do you need another monthly bill?
Right. It's situational, but we get enough bills, so that's why we have that capital needs analysis. Why do we need this? What is it for? What are the reasons? Who are the beneficiaries? And then it kind of just almost is like just a clearer understanding of like, you're right, I don't need this.
Right.
Or, wow, I might need a little bit more. And just having everything on paper, just because I'm a visual person, it's just like, oh, yes, like seeing is believing.
Now, wanting to know what you need and knowing what you need, shifting again off of that, I'm hearing more and more people, younger people who are 10, 15 years younger than me, 20 years younger than me even, talking about already trying to plan for their retirement. Mm-hmm. I'm in my early 40s, and these are kids in their early 20s who are saying, if I don't start planning now, I'm never going to retire. Any advice for people of that age? What should people be looking into Is there a right time or wrong time to start trying to put away for retirement?
Yesterday. That would be my advice. Is just whenever any saving you do is just going to benefit you in the long run. And that's where it's just little things of just putting money away, or hey, I'm going to open up a Roth account. Like, oh, you opened up that Roth account. We're dealing with marketplace insurance. That's tax-free income. That's really going to help us. You might be able to retire earlier. So little things like that where it's like, someone thought about that at 20.
Right.
Because you can only put so much in a Roth each
Right.
year. So if you and you don't have to max it out. That's what everyone thinks. Well, I'm not putting $6,000-$7,000 away every year. It's like, well, I wish I could too.
Right. Don't we all?
But even if we put 500, because it's going to grow over time, and we don't need the money now.
Right.
So, but right now things are not cheap
No.
and stuff. So, or maybe even opening a brokerage account. It's like, well, let's invest a little bit of money. Only invest what you're willing to lose, right? Or if you need the money next month, why would you do that? Even just opening up a checking account. There's so many people that just don't even have checking accounts.
Right.
They go to the bank and cash their checks. That is not good.
Right.
So, just putting money away, thinking about it, having the conversations, that would be my biggest advice, because you don't want to, I have to have realistic conversations a lot of times. And that's not a conversation I enjoy, saying like, I don't know if this is going to work.
Right.
And that's what we don't want you to have a part-time job in retirement. We want you to have a part-time job in retirement just because you want to.
Right.
Right. Keep the brain going, keep active, talking with people, but we don't want you to have one.
Right.
And that's the worst thing. And so, but yes, it's all about your lifestyle, living within your means. And I feel like our society, everything, shiny objects, this
Right.
is new, and our credit card debt is outrageous right now. And staying away from credit cards, controlling your debt, but putting things on paper has really helped me. Just like, wow, I pay this much, or look at your bank statement. Look what comes out of it,
Right.
And we talked about it on previous shows about like, wow, look at all these subscriptions we have, and they auto renew.
Right. So you don't even think about it.
Yep. So if you have Netflix, guess what? And it went up $5 a month. You didn't realize it. It just keeps coming out, and it's like, do you even use that anymore?
Right.
So it's quality of life. But I've seen two people come in, work the same job, work the same amount of years, and one person had all the toys and did all these things and traveled, and they got to keep working. The other person could have retired 5 years ago. So it just depends on which person you want to be. Some people are like, I'm not guaranteed tomorrow. That's how I want to live. I'm fine with it. And
Right.
I can't say they're wrong, but it's tough to have these conversations with people like, we're not going to maintain our lifestyle or even pay our bills if we just go on Social Security.
Right.
And they're like, well, I'll get a job. It's like, yes, but what if you have a health scare and you can't? So that's why if planning, I don't care if you're 18 years old, what are you doing? Can you do it? And if you can, afford to put a little money aside, absolutely no brainer.
Now we've talked before about, and I'm paraphrasing you here, but you've said, people come into you and say, well, I want to start saving for retirement, but I've got a bunch of credit card debt or whatever. Your advice has been, take care of that first.
Attack high interest debt. Absolutely.
Right. Get rid of it, then start putting money away. What's your recommendation for a young person who has issues with if they start putting money into, like, let's say, a savings account or a checking account, and they see it sitting there and it's getting a little bit of interest, but then they see something they want and they see that pool of money and suddenly that looks very tempting. Is there options that they can put that away and maybe have restrictions on accessing it, or they can have it kind of a untouchable money?
Well, it's tough. Are you talking about kids, or are you talking about like?
I'm talking about like 18, 19. I'd say kids, but they're in their 20s. They're.
Yeah, I mean that's tough. I mean it's because you know what you want them to do, but it's just
Right.
like and like I know people that actually give their kids, their adult children, give money to their parents, and they're like, hey, I know if you have it, I won't touch
Right.
it, and then if I do need it, I'll have to come to you and do the walk of shame, like saying I need this,
Right.
and they won't do that. So it's willpower. It really is. You know, like, oh, I need the latest iPhone. Do I?
Right.
Yeah, and
Probably not.
Right, but it's hard. I mean, it's everything is tempting, and especially like during the holiday season, everyone wants the biggest and bettest and keep up with the Joneses, and it's like you don't have to. You have to live your lifestyle, and those people retire so easily, and that's when it's fun. So we work right now to retire, right? You know, so we don't want to work our whole life, you know, and but living within your means is a huge part of retirement.
There you go. Really good advice. I always got to ask because we're getting into the season. Obviously, Christmas right around the corner. What's the big item on Matt Heir's Christmas wish list?
Oh, I despise Christmas. I don't do gifts. Like me and my wife don't do gifts. Like for
Me and my wife
birthday,
don't either.
and it's we get stuff when we need it. Yeah, some socks would be nice, but I know my mom's gonna get that one covered for sure.
There you go.
Yeah, my mom always texts like, "Hey, what do you kids want?" to our group text with all our family, and like I think my wife said she wants like new Tupperware.
Practical stuff.
It's stuff for the household, like
Right.
towels.
There
You
you
know how
go.
expensive towels are? Like shower towels, like and we have so like stuff like that is great for the household because it's just something you don't buy or you put on your wish list.
Right.
But yeah, I mean, if anything, ideal, like if I could just pick one, vacation.
There you go.
After this time of year, it's always nice to go somewhere warm.
Right. Get a few days off.
Absolutely.
I like it. Well, Matt, I want to, of course, wish you a happy Thanksgiving. And,
Yes, you too.
We'll talk to you after the holiday.
Yes, all right.
Sounds great. Last thing to tell everybody, of course,
When you want to retire.
you got to call Heiar. This has been a paid program. Advice and opinions expressed on the program are solely that of Heiar Insurance, not necessarily WBEV or Good Karma Brands.